Hello and welcome to Forex Academy, your number one website for Forex and crypto education and analysis. In today's edition, we're going to be discussing the Bitcoin bull run collapse. This is a daily chart of the BIT-USD pair. As we see here, the pair has been on a bull run and has been conforming to the upwards trend since late April 2020. The price range found support at an all-time important 10K level, which coincided with the support line at position A. The pair found a bid tone up to position B, where price action did not revert back to the support line, preferring to fade up the line of resistance where we see the breach above 14K. This coincides with the area of resistance at position B, giving the pair one of the largest single moves to the upside for several months. We then see an extended rally up to position C at 19,450K before a major pullback. So what caused this? Firstly, we need to go back in time to 2017, shown here on the monthly chart, where Bitcoin and the US dollar hit an all-time high of around 19,500K, depending on the broker. This is shown here at position A. It then crashed to 3K in the middle of 2018 at position B, and then taking 2 years to reach 19.5K as seen at position C. This is a double top formation where smart money investors saw the potential of a reversal in price action, where many traders were hoping for a continuation to 20K and beyond. Now we can drill down to the 1 hour chart where we have a classic area of support and resistance at position A. The resistance line is breached to form a pushback to $19,500 before a pullback to the support line and a second attempt to move higher, which forms a double top, and price action does not sustain the move higher and falls back to the support line at position C before crashing lower with larger candles suggesting extreme volatility through eventually punching through the support line at position D. This becomes an area of resistance before the pair crashes to a low of 16,300K. This move came about due to a series of important factors including historic highs, followed by a crash, followed by another bull run. Cautious traders would be reminded of the previous crash, and they were prepared to sell their Bitcoin and Bitcoin futures as we see on our charts. Because of the nature of Bitcoin, which has no store of value, other than the fact that it has a limited supply and is predominantly a speculative instrument. Thrown into the mix was the current bull run topping out just before the US Thanksgiving holiday, where traders will have decided to unwind their trades and take their profits. Bitcoin proves again that it is a highly dangerous asset to trade. With one story of $100 million losses in the press today, timing is crucial. The main BTC USD lost 11% to 24 hours and dragged other crypto assets lower in the panic. However, by using simple trend lines, support and resistance lines, and dropping up and down the chart timeframes, traders can gain a clear understanding of the risks and potential for turns in the price action. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.